Now, the bears continue to hold sway in the Nigerian equities market as profit-taking continues. Meanwhile, the Securities and Exchange Commission has released a framework for the banking sector recapitalization exercise. Ekene Oyeka, securities dealer at Norrenberger, joins me to review trading activities shaping investor sentiments. Ekene, thank you for joining us today.
Thank you for having me, Esther.
Well, it hasn't been a great quarter, a second quarter for the market, especially for the five key sectors. I'm talking about the oil and gas. I'm talking about the banking index, insurance, consumer goods, industrials, and oil and gas. But oil and gas has done pretty well so far this quarter. This year, up 5.2%. Talk to us about, what would you say were the key highlights so far in the second quarter as the market wraps up trading for the quarter?
Okay, basically, like what you just said, we've seen those sectors that have been able to, withstand the headwinds that have really happened over the course of the quarter. One of the key highlights, per se, is majorly is about the bank recapitalization. Actually, we saw the likes of Fidelity Bank coming to the floor of the exchange, announcing their right issue and also their IPO to the floor of the exchange. So definitely, as it's going right now, we tend to see more of those activities, both in the banking sector and also physical reforms. If they are being put together, we tend to see a lot of those activities, and also we get to see more investor sentiment trying to key into those sectors. But so far, so good. The year-to-date is still looking very strong in the markets, and also in terms of liquidity, even though we are experiencing some profit picking at the moment, but we still have much confidence regarding those sectors also going forward to the next quarter of this year.
All right, I was talking earlier to a previous guest about interim dividend payments. Now, I suppose that I imagine investors are looking at those companies that have had a strong 2023 financial result and have done well so far this year. For those who pay interim dividends, are investors eager for those dividends, interim dividend announcements? And what stocks or what companies do you have on your radar for that?
So definitely, we've actually seen companies over the course of the years pay interim dividends and also final year dividends, and this could actually be as a result of the performances of these industries and also what they've actually done so far in the market. So in terms of stocks, that are actually very consistent in their dividend paying history, I need to take your attention back to the banking sector. The majority of banking sectors actually pay interim dividends. So what this means is actually shows you the level of participation and liquidity in that space, and also the terms of the operations, right? So it's more likely we're going to experience that this year also. We also saw that last year. So take, for instance, the likes of Zenith and GT Code, and also the likes of Access Bank, right? So these are still, stocks that will still definitely able to churn out good results and also be able to give our investors this boost in terms of interim dividend and also final year dividends by the course of the year.
All right, let's talk about trading forecast for this week as the first trading day for the week. What are your expectations in terms of where investors will be looking for value or bargain hunting stocks? And also, are investors looking for clues? Because we did have the inflation data out last week, wasn't too great and not good news for investors. But where else are investors looking for clues that the economy is recovering, and also forecast for trading this week?
So we've seen what has actually happened, right, in terms of deflation numbers and also the instability of the exchange rates, right? So these factors, right, are still very much within our purview. We shouldn't take out the fact that these metrics actually have an effect in terms of the investment environment. So most definitely, we intend to see those kind of things still playing out. Although the market actually last week it closed on bearish sentiments, right? And we also intend to see those runs still happening right in the market. But nevertheless, it's still looking very good in terms of year to date, as I said earlier on. and also in terms of participation. So what investors are looking at right now, number one, is to actually do what's called our portfolio restructuring, right, and rebalancing of their portfolios, right, in terms to see stocks which can actually outperform all these headwinds happening in the economy. So we intend to see that going to play out this week, because of this week, and also hopefully if reforms for fiscal policies which have been put into place have been actually be harnessed to a certain level, we begin to see, an upswing in the market. But technically, as it stands right now, we tend to see this run over the course of this quarter.
And I was taking a look at the ASM index. For this quarter, it's completely flat, no movement whatsoever. Just wanted to get your thoughts on. I mean, we know why it was created in the first place for smaller companies, etc. But I mean, what are your thoughts in terms of what is going on and why we're not seeing any traction in that particular sector?
Number one, you don't need to take out the fact that in terms of the cost implications of trying to run those kinds of transactions in that space maybe looking very, very challenging, right? So you need to not based on the reality of things, and companies also trying to check their books and also try to streamline their interest expenses and also their income revenues they generate, right? So we don't tend to see so far some of those has actually been some of the factors have actually affected that space, right? Looking at it was very flat at the moment, right? But what I said earlier on, like once the economy is looking very viable, right, in terms of stability, FX, right, and also the impact in also the inflation rate, right. Once the government can actually, look inwardly and try to look at, exports, related goods, right, we intend to see more tractions in this space. So it cuts across not just really asset, it cuts across other asset classes in the market. Right. So once these things have been put in place, because the chain reactions, basically what's happening in the economy has a way of influencing those other investments and those space. So I still stand on the point that if fiscal policies reforms are actually put into place and actually being looked into and actually being implemented as it's supposed to be, we intend to see those activities in that space.